Good afternoon, everyone. Thank you very much for coming in a busy afternoon. So thank you for joining us today. And my name is Yoko Watanabe. I'm the Director of Environment at Asian Development Bank. And so this is a session that we will be talking about how MDBs can be partners with others and scale up nature finance. And scaling nature finance is essential for climate resilience, biodiversity conservation, and also sustainable development and livelihood. So we all know that healthy ecosystems such as forests and wetlands and others provide critical services for flood protection, temperature regulations, and natural products. And our economy actually relies almost in Asian Pacific, 75% of our economy relies on nature and natural resources. So it's an essential base for us to work on and ensure that we ensure a healthy nature and healthy ecosystems. So following the MDBs, the Multilateral Development Bank's statement on nature, people, and planet, MDBs have come together and making efforts to increase nature finance and nature investments on the ground and improve the impacts of related initiatives. So last week, we actually launched with Inter-American Development Bank and World Bank and EIB here on one of these collective works from the MDB Nature Group, which was to launch the updated common principles on tracking nature finance and also the taxonomy that comes with it, and also a practitioner guide on nature metrics and be able to show results and impact on the ground. So following with this series, this session is really to highlight on what are we really doing on the ground. Are we really innovating or really scaling finance? And what are the lessons learned from that? What works and what is not working? And what can we do more, which is really an important question. So over the next hour, please join us in this discussion. We have a really great lineup of speakers and keynote speakers. So I'm sure you're gonna be enjoy the discussion and hope we have some small time to also get Q&A so that the participants can also come together. So with that, I actually need to press this. So this was me. To set the scene, I wanted to show a video here on how nature is important for climate and economy. Well, hope the video works. Music is working at least. One more try, and if it doesn't work, we'll move forward. Okay, I'm glad the technology worked and we can move forward. Okay, so with that, we will have a opening remark now and start followed by a keynote, and then we'll have a panel, and hopefully we'll get to the point of having some dialogue and having a closing remark. That's a sort of the flow of today's session. So, with no further ado, I'm going to be asking Qingfen Zhang, our Senior Director, Agriculture, Food Security, Nature and Rural Development at Asian Development Bank, to make an opening remark for us. Qingfeng, floor is yours.
Thank you so much, Yuko. Again, congratulations for Yuko. Bring one of the old friends again back to this room. Very important. I want to use this opportunity to share the number of the observations. Number one, we look for this COP30 for some time already because it's conducting the Amazon. There being a lot of things about nature. You know, the collected the forests, rivers, communities, remind us nature is the foundation of the climate stability and also the food security, prosperity. And then again, you know, one of us, as from the MDB, we understand the natural financing, not exactly just money. Actually, is also mobilize money for the capital for the restoring forests, wetlands, coral reef, landscape, but more importantly, also protect the community, reduce the disaster risk, and of course, is a crazy green job. So this people, planet, prosperity so critical. So this is something I want to take this as an opportunity to share. After this MTB statement on nature, what already happening? Again, you know, after this statement on nature, we ADB, Inter-American Bank, Asian Development Bank, World Bank, we get together with Stanford University. We have these 15 pilots. Inter-American Bank, 5 countries in Costa Rica and many other countries, and the World Bank have the 5 countries of Africa. And then the ADB, we have the 5 countries for natural capital financing and also natural capital accounting. I want to use the opportunity also showcase what will take place. Number one is Armenia. Right now, after this MDB efforts, already started quantify how the health watershed can generate the hundreds, millions of jobs, and also can support the food, energy, fisheries, and also now they are ready to prepare for the COP17 on biodiversity next October. Number 2 is back to the Yangtze River. Through this MDB efforts, we already apply the gross ecosystem GEP accounting to get this low carbon investment transformation along the Yangtze River. Actually, we already accumulated $3.7 billion for this natural financing already. And then back to the headquarters of the IDB, we also launched Philippines Natural Capital Accounting Act. Right now, this year, IDB going to approve the first policy-based lending for the blue economy for the Philippines. And then Sri Lanka, we also use this ecosystem accounting to shape the land use and agricultural policy, linking the natural assets with the livelihoods, irrigation, climate resilient investment, and so on and so forth. And then the 5th country is the Cook Island. We already value the Cook coral reef and also wetlands as a living infrastructures. Showcase nature is also part of infrastructure, and also we pilot the payment for ecosystem services for the small islands economies to sustain the prosperity. So inspired by the MDB efforts, IDB together with the Inter-American Bank, World Bank, right now, we already started to introduce our natural capital approach. 3 key pillars Number one is we use this natural capital lab. We was the natural capital accounting. We bring the missing value of the nature into the project design, from the agricultural, water to the coastal and also urban development. This lab now is support the natural capital accounting, natural capital financing for agri-food system, blue economy initiative, and also the more importantly, our flagship program, the regional flyway, also supported by this natural capital lab as well. Second, very importantly, ADB this year in May, ADB launched the $150 million US natural capital fund in the annual meeting. We use this blended financing to de-risk the early stage and also private sector natural investment. This is exactly needed to move from the small pilot to the motor country and motor sectors portfolios. Again, this is very important now to enable our private sector investment. And then the third component is a landscape approach. So Greg, we will discuss this landscape approach many years already. Again, from the ADB side, of course, through our Yangtze River Economic Bay Initiative and also Yale River Ecological Corridor. And recently, with the support from the GCF, we launched the graduate farm program. So now is nature-based solutions is already part of our investment. So again, use this opportunity. Also, I want to share my third observations. Actually, the last week, of course, we already jointly announced our joint MDB's taxonomy, and they use this as a basis. We going to work together to risk our future investment, particularly through the guarantees. First, the loss capital and also biodiversity credit, and also the blue and also nature bonds. So this type of the mechanism, of course, from the ADB side, we have the Natural Solution Finance Hub, or Natural Capital Fund, Natural Capital Lab, and the Interbank Bank also have the Natural Capital Lab. Work together, I think we can join the license, support the work of our DMC to achieve the ambition of the global biodiversity framework and also the 30 by 30 target. So again, as a closing, this session, of course, is talking about corporations across the MDBs. Many of our countries' representatives also in this room, we can further discuss about how we work together with the government, technical partners, private sector. Again, is our joint missions very clear. Make it the natural positive development as a norm, no longer as just an exception, and also scale from the pilot to national program, and also turn the variations into the investment into the impact. So again, with that, I turn over to Yoko and look for the rich discussions ahead. Thank you so much, Yoko.
Great. Thank you so much, Jing Fang, for this opening remark and showcasing some of the work that ADB is doing together with other multilateral development bank and partners. So thank you very much for putting the scene. And so now I'm really honored to introduce our keynote speaker. So we're having Valerie Hickey, the Global Director of the Climate Change, the World Bank Group. Valerie doesn't need really introduction, but she's a champion and a leader and a passionate sort of environmentalist and being working on both environment and climate. So she herself is a nexus in a way. So the floor is yours, Valerie.
Thank you so much, Yoko. And I have to say, it's been one of the pleasures of my career that I've been working in this business for a long time. And I get to work with brilliant people like Yoko and have done and have learned so much over the years. And that we work as an MDB family, whether it's with IDB, whether it's with EIB, of course, our own sister IFC and many others around the table. It's so important. But I want to start by saying something that's controversial. Shouldn't be controversial, but it is. There is already lots of money being spent on nature. Anybody who tells you there's not enough money for nature, that's a different question. But there is lots of money being spent. Just the MDB family alone we're spending lots of money. So the World Bank Group last year spent $8.8 billion on nature finance. As an entire family of MDBs, we spent half, or we invested half of what is the Kunming-Montreal Global Biodiversity Framework's Target 19 for international financing flows for 2030, already last year. So think about that. So that's just MDBs. Governments are spending enormous amounts on nature. Here in Brazil, the federal government spends over $300 million just on their forest service. That's just one government agency working on nature here in Brazil. Farmers, the 550 million smallholder farmers, family farms around the world, spend almost $1 billion a day on nature-based solutions to adapt their farms to climate change. That's almost $1 billion a day. And the private sector, just one example, the market for wood products is almost $900 billion a year. So there is lots and lots of money for nature. Here are the two reasons why people don't believe that and why that's controversial. The first is that when we think about nature finance, we tend to think about only one of the three legs of the Convention on Biological Diversity. We think about conservation, and only conservation, and that there isn't enough money for that. We don't tend to talk enough about the money for the sustainable use of nature, which is the second pillar of the CBD, nor for benefit sharing, which is the third pillar, ensuring that the families and communities who are the stewards of nature, who live with nature every day, are thriving. So that's one reason I think we don't think there's enough nature finance. The second reason we don't think there's enough nature finance, because compared to the anti-nature finance, we are a little bit smaller. When you look at the amount of money that's out there to degrade nature, to liquidate it for private gain and for public loss, it's bigger. Just agricultural subsidies is almost $2 billion a day, the majority of which end up leading to more desertification, degradation, deforestation, and drought. They're not necessarily supporting nature. So that's part of the reason we have a little bit of a sense of poverty about us when we think about the amount of money for nature finance. And of course, all this is happening today in a world where there's just less money available, particularly in the public sector. Governments, particularly governments in emerging economies and developing economies, where an awful lot of the most pristine wilderness remains and the most amazing wildlife remains, are fiscally bankrupt. They have very little money left. Just think about the countries of sub-Saharan Africa where they're paying more on their interest on their debt, on their interest, than they're able to invest in health, education, and infrastructure put together. So clearly, it's not a place where they're going to have a lot of extra cash lying around for nature. The same thing, of course, for the fact that we have less overseas development assistance, a place traditionally we've gone to get the concessional money, particularly for conservation and benefit sharing. It's a lot less ODA today than there was at COP29. So that's the context in which we're doing. And that's why for us as MDBs, when it comes to nature finance, our watchwords are capital coordination. It's partnership, basically. How do we make sure we're using our money at the right price with the right partners to have the biggest impact? I think about it in the sense that we need to think about money as a relay race, where each of us across the supply chain of nature finance hand over the baton to the next player. Because right now, we have philanthropic money, we've got domestic public money, we've got international money, international public money like MDBs, and we've got private money. And we're all running really hard, really fast, exhausting ourselves, but it's like a 100-meter sprint. We're all racing against each other. And at the end of it, no matter for all our efforts, we've still only run 100 meters. If we ran a relay race, we could run just as hard, just as fast, but we'd get 400 meters. We have to change the way we coordinate our capital and stop doing our own thing, leading to this boom and bust of project finance, and instead sync up our capital. And that's why we're focusing on 5 things as MDBs. First is data. Just this week, the MDB family launched our new taxonomy for accounting for nature finance and joint principles for accounting for nature finance. Together, we all work with the UN system of environmental economic accounts on natural capital accounting. You heard from Xingfen just before me. And we're working on taking apart the growth models that every Ministry of Finance uses to predict their growth, and including nature and ecosystem services into that black box. So we're working on data because, as Yoko always says, if you can't measure it, you're simply not going to manage it. And you're certainly never going to invest in it. So data matters. The second piece that matters is policy reform. Yes, it's about subsidy repurposing. We have to turn that $2 billion a day in agricultural financing from something that is undermining nature to something that is protecting it and growing it and enabling the growth and diversification of businesses around it. That's important. That's why we need to celebrate more the successes on subsidy repurposing, including when it comes to nature, the incredible agreement that was made at the World Trade Organization that was ratified this year on fisheries subsidy repurposing. That's $22 billion of perverse subsidies that goes towards fisheries that have been repurposed to support sustainable fish management and sustainable marine biodiversity. That's so important. We have to celebrate the wins. But policy reform doesn't just mean subsidy repurposing. It's about figuring out how can you create private capital enabling reforms, like land tenure reform, that's fit for purpose in different parts of the world. It doesn't mean private sector reform in every place. It can be community tenure, but it has to include women. When we live in a world where agriculture is increasingly feminized, where there's more women working on the front lines of agriculture because their husbands have left to find work elsewhere, and yet they live in countries, 40% of which across the world don't allow them to own land, that's a problem. That means they can't invest in their neighboring nature. So we've got to figure out the policy piece. The third piece is about institution building. The most cost-effective de-risking strategy in the world to attract private finance is giving private capital a credible commercial partner in government. But it's not just about building strong institutions in government, it's about help community organizations, micro and small businesses be credible so they can go to their local bank and access credit that they can put towards becoming a leader in the bioeconomy. That doesn't mean giving them support on the bioeconomy piece. Local community organizations, small business entrepreneurs, they have an idea for the technical piece. That's not where they need help. Where they need help is figuring out how do you document a track record? How do you build a credit history so you can go to the bank and tap capital? That's the kind of institutional building we're doing as an MDB family. Fourth thing we're doing is building resilient infrastructure. Yes, that means concrete infrastructure too, most of it hybrid, gray-green, because you've got to help build that bioeconomy on the back of giving people access to markets. You've got to allow people benefit sharing from nature, in part by making sure they have access to hospitals and to education. So we need that infrastructure, but we are also investing in IT infrastructure because we need to be able to turn the data we're working on into credible decision making. And for that, you need IT infrastructure. You need digital MRVs that countries can use, that finance ministers can use to issue bonds in the market. So they can issue and access cheaper money on the markets by trading interest rate for key performance indicators. But for that, you need your IT infrastructure. So it's finally resilient infrastructure. And the last thing we're working on is better access to finance. Ours, of course, our dream for all of us across the MDB family is making sure we're giving people the right price at the longest tenor possible for the fastest execution. But it's also about working to make sure that we are unlocking the power of local banks, the capillarity in the market where most people go to get money, to invest in their local nature, to start a business for the bioeconomy, to do a little bit of conservation on their land. They get their money not from the World Bank, not from the Asian Development Bank, but from the local Bank of Valerie that's down their street. And it's our job to help make sure that those banks learn that nature is the future, nature is an investable proposition, and nature is where we all need to be putting even more money into. Thank you very much.
Well, thank you so much, Mallory. That was fascinating. It was like in 10 minutes, you kind of summarize what we all do as MDBs to really mobilize finance and make an impact on the ground, and also an inclusive approach, and also the power that we can really have when we partner together. So, thank you so much for that. So, now we're going to move into the panel discussion, which is really exciting. So, first of all, let me introduce Larian Boyer, who is a global manager of the climate and sustainable finance transaction support at IFC. Please have a seat here. The next speaker, next panelist is Camille Maclay, the Deputy Director of the International Advisory Panel on Biodiversity Credit. Thank you. And the next one is Gregory Watson, Chief Biodiversity and Natural Capital Unit from the Inter-American Development Bank. And finally, but not least, Eva Meyerhofer, the Head of Environment Policy at European Investment Bank. So thank you very much, all of you. Oh. Oh, sorry. Wanted to set it up right. No. Can you make it? Can you make it? Okay, great. So thank you so much. Sorry that a bit technical issue because I wanted to have the right screen on this. Okay, thank you. So the panel will be discussing about our experience as NEBs in working on nature finance and what are the sort of activity initiatives that has been successful, and also the lessons learned and the challenges that we faced. So the first question for the panelists is, how can multilateral development like ours and the partners effectively mobilize public and private resources to scale nature finance and investments? And please share some of the great examples that your institutions have been leading on, and what are the lessons learned. So I'll start with Eva. Mike is yours.
Thank you, Yoko. Tough act to follow after Valerie, since, as you said, she summarized exactly what we do. But I think one of the main issues for us trying to mobilize and crowd in the private sector was very difficult because, of course, nature, generally public good, very difficult. It was very much when we set up the natural capital financing facility with the European Commission, was a lot of the financing that we saw where we tried to test different market-based instruments was public sector. It was very difficult to kind of create that investor confidence for investors to actually come in. They didn't see, where the revenues were coming in. They weren't quite sure, the long tenors that we were providing, but the outcomes of the investment was 20, 30 years down the road. So one thing that actually accelerated that whole, financing in nature was when the European Central Bank, and it started out with the French and the Dutch Central Bank, issued their first report and stated very clearly that nature was a financial risk. The moment they did that, and it cascaded down then to the commercial private banks, there was a light that went off, and they said, we must do something about nature. And that's where you suddenly got an interest, and they looked at their exposure to nature risk and said, we need to do something in the real economy because that's where they're active. They're not, as Valerie rightly said, they're not active in the conservation space. We are not active very much as a EIB in the conservation space. But where is the entry point, and which are the sectors that we can actually make a difference, and where do we mainstream nature? So it was water, and now with the whole water resilience agenda, it was urban, infrastructure a little less, and then and certainly the agricultural forestry sector. when we started testing also the implementation of nature-based solutions and integrating those into our operations, the issue was not our clients. So the clients would come up and say, yes, we can do that. So we worked a lot with water utilities. Then it came to the implementation phase and we got pushback. And who did we get pushback from? From the local communities. They didn't want it, especially after flood reconstruction. And this was also in well-regulated environments where you had the community say, nothing doing. We want gray infrastructure. We want to make sure that, the next flood that hits us, we can't wait for that wetland to be restored, and it'll take the next 10 years. And also, it meant also for some of these communities giving up part of their land or managing it differently. So one thing we learned, and it was a hard lesson for us, was that you need that upstream stakeholder engagement, get those communities involved, be gender responsive, and also be inclusive and actually listen and involve them in the design. The moment you don't involve them in the design, it's a failure and it's not going to be sustainable. So I'm going to stop there because I'll leave the other colleagues to come in. But again, it was really the central banks that actually gave that push for actually the scaling up of nature finance.
No, thank you very much for sharing that, Eva. I'll send. Oh, okay. Oh, you already have the mic. I'm sorry. I was like, okay, we're going this order. So, Greg, why don't you share from Inter-American Development Bank experience what has worked, what not worked, and what kind of initiatives to scale up nature?
Sure, thanks, Yoko. And Valerie did mention really well kind of the breadth of things that we as MDBs do. At the IDB, we calculated our nature finance for the IDB group through the third quarter of this year at 1.5 billion, which is 10% of our overall portfolio of the year. And I think that's going to go up. Obviously, we have a lot of benching of the projects at the end of the year. But I think that where does that come from is, I think, interesting. Like, what is that composed of? So there's a set of policy interventions, and we do policy-based loans where we have a huge opportunity to seek where do we find the intersection between NDCs, between biodiversity strategies, the new biodiversity financing plans, and how can we make those triggers in the policy lending that we do? You also have policy-based guarantees, like several of the debt for nature swaps that we've done in this heavily, constrained environment where countries are seeking to fund climate and nature objectives. And the money is out there. And if we can restructure that debt and basically create space, we can create 10, 15 years worth of income flows for capitalization of trust funds to support those kinds of activities. And those come with policy commitments and conservation commitments that we can embed into the guarantee, and we can hold the feet to the fire for 15 years because we can call that guarantee. Really good way to keep something like a policy-based approach going over the long term. Then I think, I'm not going to go through all the different financial mechanisms. Something I don't think we talk enough about is combining financial instruments. And there is no silver bullet in this space. And you can do a debt for nature that capitalizes a conservation trust fund. Natural capital gain that trust fund is creating can be issued in biodiversity credits. There's, I think haven't yet as a community figured when and how to best integrate different financial tools. We're doing it. We're all doing it in different ways. We're linking biodiversity credits to results-based finance and treasury bonds, for example. But I think we need a lot more experimentation there. And then the last one that I would mention, I think, is metrics for scale and for efficiency. And some of you may have seen last week where we launched another joint MDB, which is a way to find metrics for nature finance products that is aligned with TNFD, aligned with the ICMA standards, aligned with the different standards that are out there, but that also we talked to the rating agencies, we talked to the private sector, we looked at our own portfolios to say, if I'm doing this kind of project in this kind of ecosystem with this financial instrument, do I need response metrics, state of nature metrics, pressure metrics? And then what are some of the best ones that I can use? Because there's like 700 different metric sets out there. And what we hear from project developers is, I have no idea how to pick the right ones. So if we can use this to kind of come around a smaller core set. And this is always going to be local, and there's always going to be, the need for more local metrics. But that makes it much more understandable to the investor, to the government, to the finance ministries that we work with quite a bit, and to the ultimate, communities that are receiving that finance. And it makes us move the projects faster. So we go from a year for preparation to maybe 4 months. And it also means that it's scalable because we can aggregate projects more simply. So I would maybe stop there.
Oh, thank you so much, Greg. And thanks again. Greg and Eva has been in the back for really leading that metrics work that we jointly produced. And now we're talking about really implementation and how we can, use those. So thanks again for highlighting that. So now I'm going to move to Camille. You're working on biodiversity credit and you're working with awful lot of MDBs. So you can share, what you see as our role and how can we move forward and scale up.
Thank you very much, Yoko. So my name is Camille Maclay. I work as Government Relations Director with the International Advisory Panel on Biodiversity Credit. The IAPB was created in 2023 following the Paris Summit for Global Finance with support from the British and the French government. And I think one of the key questions that IAPB was aiming to address is that despite the existing financial flows that currently go to nature, as Valerie pointed out, various needs for nature conservation and various actions for nature conservation are currently not well remunerated and are not incentivized. So the question was, how do you remunerate conservation or restoration activities that do not otherwise generate revenue, apart from if you finance this on fiscal budgets or philanthropy? The IAPB aimed to develop principles around what will be a new market instrument called biodiversity credits or nature credits, which essentially represents units, certificates of nature conservation, which can be invested in or purchased to generate capital flows towards conservation and restoration activities. The concept is not very new, and in fact, the concept was explicitly listed in Target 19 of the Global Biodiversity Framework at COP 15 of the CBD. At Cali, in last year at COP 16, we published 21 high-level principles to maintain the integrity of nature credit markets. Those high-level principles focused on 3 key dimensions of integrity, which are verifiable and measurable and additional outcomes for nature, fairness and equitable benefit sharing for communities and indigenous people, and market governance and transparency. We are now working to operationalize those principles, working on 3 key dimensions, which are policies and regulations, building market infrastructure, using tools and instruments to support the development of nature credit markets, and lastly, fostering a community of practice of project developers and credit purchasers that can activate and demonstrate the feasibility and long-term sustainability of those markets. So now, where do MDBs fit in that picture? I think they fit in very nicely in those 3 areas of action. In policy dialogue, and we launched our IAPB policy forum 3 days ago at an event on Saturday night with the Ministry of Environment of Indonesia, with strong support from various partners and I think our colleagues from MDB. In our policy forum, we aim to foster policy dialogue and regulatory development with countries that have high biodiversity conservation priorities, who are typically in dialogue with our MDB counterparts and with whom the MDBs foster active public policy dialogue and technical assistance. On tools, measurements, and market instruments, yes, the MDBs are clearly fostering innovation, as Greg rightly pointed out, and supporting the development of metrics and approaches to measure additionality and nature positiveness. And lastly, on our community of practice, we are already collaborating with MDBs in support of existing project developers. One example is Terrasos in Colombia or Savimbo in Colombia and Ecuador, alongside IADB, and working together to identify off-takers and stimulate demand for nature credits. Thank you very much, Yoko. And I will hand over to your next question.
Thank you so much, Camille. And actually, among the MDB Nature Group, we now have a biodiversity credit working group. We're focusing on trying to figure out how we can apply biodiversity credit among us and how can we utilize it best. And you've been a really partner for that. So we really look forward to furthering this sort of paper that we started to work on. So with that, finally, we're reaching Olarian. You're at IFC. It's a private sector arm of the World Bank Group. How do you see how we can mobilize more private sector finance, having more blended finance and scale nature finance in general? Over to you.
Thank you. So first, coming from the climate space, I try to apply that lens and see what lesson learned we can have both in terms of pitfalls and incentive for nature finance. And the first one, as a great achievement, is to celebrate, I think, the taxonomy that was released last year. Having that command last week, that command language in terms of being able not only within MDBs, but to government, to our client partners, be able to signal what is nature finance, kind of mitigate the risk of greenwashing by having this common language is a first step that will unlock nature finance, not only for the public sector, but for the private sector as well. It's also an important signaling, and that if I do that parallel with climate finance, what has been a success for climate finance is the ability to mainstream within our institutions. Having that common language, knowing how to measure, is how we'll be able to mainstream within our institution and better collaborate with the other MDBs, the IFIs, and others. So first, like kudos, let's celebrate. I think it's important to take a step back and celebrate and not take it for granted. When it comes to IFC specifically, last year, I think we were one of the early movers. We first developed our own standard that then fed into that discussion of then the MDB framework. We had over $1 billion of nature finance. But as Valerie said, part of it, and I'll give some example, are intentionally innovative nature finance transaction that we pursued, etc. The rest, these are things that we were doing and happen to be and qualify as nature finance. But again, having that language and being able to put a label does help and incentivize. So it's very important to make sure to remember this and because also size matters down the road. Like the outcome in terms of outcome metrics is important, but being able to capture what we're doing is also important. In terms of innovation, I'd like to highlight 3 transactions that we did over the recent months. One is in Colombia with BBVA. We did a first biodiversity bond where we helped the bank issue a biodiversity bond that does support reforestation and climate smart agriculture and some kind of regenerative agriculture practices. So again, the label and then being able to translate those those principles into local taxonomies is something important. We also, and this has been replicated in the region with other banks. We also issued, and what I think is like a super nice instrument when it comes to nature finance is sustainability linked financing and tying it to metrics directly with project developers, like with biodiversity targets. And this, that we have two nice examples. What is BTG Pactual's Timberland Infrastructure Group. Here, the way the SLF was structured is with an interest rate that will come down if the company meets certain KPIs linked to biodiversity. So that's one. Another one that is, I think, even more innovative is with Natura. Is again having we have the KPIs linked to the ability to source some material sustainably from the Amazonia, and also taking into consideration and making sure this is aligned with the need of the local community. So you can come up with some creative tools, but down the road, what will matter, and that's why this harmonization of the metrics is important, is the scalability. It's not like you want to reinvent the wheel for every project. So moving to a more platform approach, which is something that we learned from climate and from other sectors is very important, and I see a lot of potential. For instance, like the World Bank Group announced the Agri-Connect platform initiative last month at our annual meeting. Regenerative agriculture should be a big part of it, and this should be linked to nature. And finally, last point, and again, my pure nature colleagues say, like, don't mention it too much, but I will do it, is carbon credits. I really see carbon credits as a connector between nature, finance, and finding alternative sources of financing. So I don't want to make nature finance about carbon credits, but excluding carbon credits from the pictures and from the discussion, I think is a mistake. And actually, it is a connector, and we need to also embrace it with, and similar to biodiversity, credits have the right safeguard in terms of high integrity, etc. But this is important source of financing for forestry and nature preservation.
No, thank you very much, Valeria, for sharing that. And also, I think, we have learned a lot from carbon credit, and also we are, adopting that to have more nature sort of oriented carbon credit, as well as, of course, the nature credit that has both benefits, and then biodiversity credit. So I think there are mechanism and, different instrument that we can apply in different situations. So thanks for highlighting that. So as I promised, I think, we can take around 2 questions or so from the audience, so that we can have a dialogue a little bit. And then maybe at the end, I'll ask each of you to say, what did you learn from COP, and what are you going to apply as a new approach, or, scaling up to use it for nature finance. So with that, let me get some questions. Like me too.
Hello, my name is Boy Heemskerk, and I'm a nature-based project developer. I have a question. Do you already have an instrument where you focus on the future carbon from a reforestation project, that based on the future carbon that a project is going to generate, that you can already use that carbon within your financial model, that you don't need to have an offtake agreement already on the other side from, okay, now we understand this hectare is gonna sequester 15 tons a year. So based on that, we know we can use that carbon as collateral, and based on that, give finance to project developers like ours.
We'll take 2 questions.
Okay, thank you. I'm pretty much happy with what the first speaker, Valerie, spoke about engaging the private sector directly. I'm open to scale up nature financing. My name is Shey Okunoga. I work with Sterling Bank. From Sterling Bank is a commercial bank in Nigeria. We're doing a lot of things with the development banks, especially with IFC. If you know about the DS program, that's the distributed access through renewable energy access scale up through rural electrification agency. We are working with IFC World Bank. We are trying to raise our first sustainability bond, and IFC is really supporting us through that as well. I like the fact that you spoke about carbon credit. In Africa, in Nigeria, I will give an example of Nigeria. We've not gotten there yet with the carbon credit because focus is pretty much on the voluntary market. You know, the compliance market is not there because the government agency is still work in progress, trying to affirm that the national climate place. So there's pretty much, so it's not a mature market yet to incorporate that into credit financing or infrastructure financing yet, but it's something that can grow and will also encourage nature financing. So my point really about nature financing, what I would say, it starts with first stopping the bleeding. You need to be able to address a lot of issues with education. So when you stop a lot of issues with education, like you rightly said, engaging the locals and the community stakeholder engagement before you initiate projects, before you start spending money. So essentially there is an effect of the financing that you have. So I think I will stop at that. But what I would say is that what you guys are doing is very good. And I think there should be more engagement with the local banks and remove the intermediary amongst other banks, the government most especially, that slows down the execution of projects, knowing fully well that the commercial banks, or well, the other banks are the ones that really do the risk assessment, understand it, do some level of blinding financing to be able to get this fund to where it's really required. Thank you.
Great. Good. Two great questions. Who wants to take it over? Oh, okay. Third question. Okay. Sorry.
So on that, I don't have an emerging market example, but this is the work we do with Ireland in terms of the peatland restoration. So Ireland has set up this framework, exactly that they assess not only the carbon credit, but the water credit and the nature credit, because it's a stacking of credit with the local farmers, with the local forest owners, and then kind of future bank it, and they can use that as collateral for helping them shift in their transition. So it is an existing model. I would suggest also looking at Scotland. They do exactly the same thing. And it's one that could probably be replicated. And just very briefly on your point on engaging communities up front. So this is one of the hard lessons we learned. And so we set up an incubator facility with WWF to be able so that they could, because we are not on the ground, they could start engaging the communities upfront in the design, preparing that before we come in much later with the investment. But you need, and the example that we had was in Greece. It took us a year of community engagement to actually get to the project design that was acceptable, that was inclusive to the communities. So it takes a long time period. And so you need to set up these platforms and incubator facilities in order for that to happen. But then once that is done, the project runs smoothly.
Yeah,
Go ahead.
very quickly on the two questions. First, you work with local banks also to build the capacity. And for instance, in South Africa, we have a South Africa accelerator working with developers, with local banks to share lessons from how to build and finance nature finance. So it's not just about the financing and then channeling to the project. It's also helping the bank develop the capacity on identifying, measuring, etc. The nature positive project. On carbon credits, yeah, an answer is Yes, and it depends. We do finance projects that have marginal revenues that are part of the credit assessment. We also do pure play carbon credit investment, but it's a long due diligence, especially on the integrity, because there's a commercial part of it and knowing is it sustainable and like over the long terms and revenue, etc. But a big part of the due diligence is both on the supply side and the demand side of the integrity of the carbon market. So we don't undermine carbonization, etc. So it's possible, but we are very demanding when it comes to project with carbon markets.
Great,
I
Greg.
wanted to address your question about the local financial institutions. So, I mean, one example is something we launched just a few days ago here in Brazil called Eco Invest with the Treasury of Brazil. And that's where the IDB is supporting the Treasury of Brazil to create a hedging mechanism for private financial institutions in Brazil to access for projects that will have a KPI around nature or other sustainability. We did 4 auctions. The most recent auction should mobilize $3.4 billion for projects that will have a specific focus in Amazonia on biodiversity. So that's a Brazil, as an IDB example in Brazil, but that's something that could easily be replicated in other regions, right? And it just takes the right partnerships and the right kind of catalytic capital, and again, the right kinds of KPIs to be able to structure those. And actually we piloted the KPI work that we developed in this Eco Invest auction.
Camille, did you want to chime in here as well as a final point?
Yes, well, I think I will come back to first. I will point out a paper that Inter-American Development Bank and IAPB published a few days ago on the role of MDBs in supporting nature credit markets. So please refer to this paper, and this is open for consultation. So we will welcome remarks and suggestions on this paper. I will just address very briefly your question, really saying that our work aims to foster the development of nature credit markets that learn from carbon credit markets, are additional and generate additional finance flow from carbon credit markets. Can I borrow that? We can go into detail at another point. I will, and to respond to the gentleman on communities and participation, I will really underline that condition for high integrity that has been clearly set by IAPB and its partners, which relates to effective community and stakeholder participation, safeguards, and equitable benefit sharing, which we think is a key design archetype that must be applied to nature credit markets to secure the right level of integrity and therefore demand from off-takers.
Great. Thank you very much, all the panelists. So last word, maybe what would you take away from all these conversation about MDBs, taxonomy and also metric and now implementing initiative? What would you take away and implement back home?
I think it's time to operationalize. I think we need to move away from just pilot projects and really now scale up. So that's what I'll say.
And I would go to the point I made before about being more deliberate about how we combine different financial instruments to take advantage of benefits.
I will say a huge appetite from many countries in reflecting upon and working towards the emergence of nature credit markets. In fact, our team has been running from country delegation meeting to another, and every time we've been greeted with extreme interest, and we've received a lot of expressions of interest to participate in our policy work. I think this is really encouraging, and I see a future for those high integrity, robust nature credit markets with the kind helps of our MDB partners. Thank you.
Okay, great. Thank you so much, panelists, for amazing talk. Please stay as we invite the closing remark from our chief economist and director general, Albert Park from Asian Development Bank.
Thank you very much. Thanks, Joe. It's a great pleasure for me to be able to help close this important discussion we've had today on scaling nature finance. So I've learned a tremendous amount from the last hour.
La conception d'un instrument innovant de tarification carbone dans le secteur minier, ce qui est premier du genre en Afrique.
Okay, I'll just struggle through. Thank you. Yoko and Qingfang obviously do a great job leading our work on nature. Our research department also supports and are working on the natural capital projects, especially on the ecosystem service valuation side. So one important takeaway I get from the conversation is that nature finance is not just an environmental imperative, but an economic one. And that's also an important message in the report that we released just before COP on unlocking nature for development, our annual Asia Pacific climate report. Healthy ecosystems provide so many services, but still they remain undervalued and underfunded. So in departing today, I want to underscore 3 key messages. First is that scaling nature finance requires mobilizing both public and private capital. MDBs and their partners are already innovating. I think you heard about this with what the IFC was talking about in the biodiversity credit. We're working on guarantees, blended finance, instruments like blue bonds and sustainability-linked bonds. ADB last year issues its first biodiversity and nature-themed bond for $100 million and continues to make progress with its Nature Solutions Finance Hub. The second message is that, and I think one that was emphasized by Valerie, so I won't repeat all of her wisdom, was that we really need to work on supportive policies and institutional advances. And here governments, of course, play a critical role by embedding nature into national strategies through their NDCs, green taxonomies, enabling regulations that make nature solutions viable to reach scale. And MDBs, I think we've all gotten a sense from the discussion today, have a really unique and critical role to play. MDBs have a convening power. They can bring finance, and they can also bring expertise and support capacity building that can put all of these different, help put all of these different pieces together. I think you heard, the efforts by working together to develop the common taxonomy about how we track nature finance, but also the details of how we measure things in terms of metrics for impact, as Greg emphasized. These are really good examples of how it's really important to work together, because by standardizing and harmonizing how we talk about things and measure things, that's going to really be important for scaling up and for collaborating. And the final lesson is that collaboration, of course, is essential. The MDB joint statement on nature, people, and planet set the tone in 2021. And I think every year at COP, we deepen this commitment. We, I think, learned a lot about the challenges of doing this work effectively. Eva talked about the importance of getting communities involved early. Greg talked about policy-based instruments and the importance of metrics. And Camille, I think, helpfully described MDBs as providing a community of practice that can really help us learn effectively from each other. So as we look beyond COP30, let's just remember that nature finance is climate finance, development finance, and resilience finance, all in one. It's really central to achieving the big goals of the Global Biodiversity Framework and the Paris Agreement. The challenge, of course, as Eva emphasizes, to move from the pilots to portfolios, from commitments to capital flows, and do this at a scale that will really move the needle on the nature financing gap. So I invite all of you, MDBs, partners, governments, private sector, to continue working together in this collaboration. And thank you for your engagement. And thanks for coming today.